My name's Hamish. I'm the Director of Mulberry Support Services, and I'm also a support worker myself. One of our main goals at Mulberry Support Services is helping people build independence. So in kind of furthering that goal, I've reached out to some people to help set up a little podcast type deal, and I've invited some very special guests to answer some questions that I would like answered, that my participants would like answered, and that I'm not legally allowed to answer. So that's why I brought on Conor.
Hello, Hamish.
So Conor, why are you here today?
So today I'm here. I saw Mulberry online, and I really like what you're doing when it comes to supporting your participants, and I wanted to share some information that I felt would be helpful. A little bit about myself. I own and run Dandelions, which is a mortgage broking firm specialised in ethical home loans, and every day I spend my time helping people find home loans, achieve their dreams, and I thought, why not extend that to you?
Oh, fantastic. It's a big world in finance, and it can be a little bit confusing to know who to ask. So I think that maybe one of the benefits today is that we might find out who's the right person to ask. So what are we going to be talking about today?
Yeah, so it's pretty simple. So today, my biggest focus is going to be around budgeting and how a budget can help you achieve your goals.
Cool.
Then talking about banking in a little bit, and then you've got some questions lined up from your participants as well.
Yeah, I've canvassed some questions, and I think some of them are pretty good and pretty insightful.
Perfect. I guess the big thing I'd like to start is a bit of a general advice warning to remind anyone watching this video that this information is general in nature, and that it doesn't take into account your personal circumstances, your goals, or your financial needs. So before acting on any of this information or that you find in this video today, please make sure that it is relevant to you before proceeding.
Fantastic. So just jumping right in there, what is a budget?
Yeah, a budget is put simply, is a tool that tracks money coming in, money going out, and anything left over is you allocating a spot for it.
Okay, cool. So why are these important?
Yeah, well, without a budget, you might find yourself a bit lost where your money's going. So you might be finding that you don't have enough money at the end of the pay cycle, or you're finding that these bills keep coming and you can't keep up. So having a budget will allow you to have a sense of control over your money and make sure that you're actually prioritizing your goals.
Oh, fantastic. I think that kind of leads into a question that I got a lot when I was talking to my participants. A lot of them are very eager to purchase a home. So how can a budget help you with that goal?
Yeah, purchasing a home is pretty amazing. It is very difficult, particularly for young people these days. So I would say how a budget can help is when you buy a home, you usually need a deposit. Obviously, there's circumstances where you don't, but let's say you do. So if you're buying a $500,000 home, that means you need at least a 5% deposit in most cases, which is $25,000. So to save that without a budget or without having that goal in the first place is probably going to be a bit difficult. So a budget is really the first step in getting you there. Yeah,
cool. So you want to purchase a home that's $500,000. Let's maybe scale it up to say $600,000. That would be quick math, $30,000. So maybe the budget could be like how to break down that $30,000 into maybe like a yearly goal of like, if I save this much money over 3 years, if I save 10 grand over 3 years, I'll get to that $30,000.
Correct. And then once you've got that, even making it smaller and more bite-sized, so aligning it with your pay cycle. So if you get paid weekly, fortnightly, monthly, really breaking it down so then you know that it's going to get you there and how long it's going to take you to get there.
Fantastic. So how do I make a budget?
To make a budget, all you need is a pen and paper, or if you're tech savvy, using something like an Excel or even Money Smart website. They have a budgeting tool there. And you're going to start recording. So you're going to record down any money coming in. So this could be coming from work, could be coming from Centrelink. Write down when it comes in and how much it is. And if it's not ongoing, make sure you've got that in your back of your mind too, because you don't want to budget for money that's not going to be there at the end of the day.
Yeah. Would you say timing is a really important aspect?
Definitely. So when we go into the expenses part, if those bills have to be paid at a certain day of the month, you're going to know what pay cycle that's going to need to come out of. So recording the frequency is very important too. Once you've got the money coming in, the other half of the equation is money going out. So write down any expenses you have. If you get a bit lost on what expenses to write down, just look back at the last few months of your spending to see what's regular, what is coming out regularly, so you can account for that.
Yeah, so go into my banking app and check my bank statements and see.
Correct. If you're a paper person, then you may be checking receipts. But yeah, any sort of history will be a good starting point.
Okay. So I've got a budget. Once I've made the budget, am I finished? Is the job done?
Yeah. It can be, I guess. But what really makes a budget really powerful is putting in goals, and it really makes it personal. So if you have a goal to buy a home, or to pay down a credit card, or maybe even to save for a holiday, that goal can be added into that budget. So we've spoken about it briefly, but if that goal is $30,000 to buy a home, and we've broken that down over a 3-year period, we then work it down to our monthly or fortnightly goal, and that's what we put aside.
Yeah, fantastic.
Yeah.
And I guess that kind of math can help you tell if a budget is realistic.
Correct, yeah. So if you're doing a budget and you usually go out and have a coffee, or you go out with friends, or you even buy like games online, but you haven't put that into your budget, it's going to be quite quick that you're not going to stick to the budget, because you're not going to be having like a normal life.
Yeah, so you have to be a bit strict with the budget.
I'd say a bit strict, but realistic. Realistic, yeah. And then I guess once it's done, it's not a set and forget. So a budget needs to be reviewed usually on a monthly basis to make sure that you're sticking to it. And if things are coming up that haven't been accounted for example, you forgot a bill, you're going to need to put it into that budget to make sure that you don't make the same mistake again.
And I know for a lot of people with their budget, it can be quite disheartening when those unforeseen kind of expenses come up. I think something I try to tell people is just stick with it. Like, even if it's, don't ignore it.
Correct. Yeah, the more you ignore a problem, it's going to get worse. I guess when you have a long-term goal that might take you 3 years to get to, definitely have some moments of celebration along the way, which could be buying something, or it could be, celebrating with a friend, whatever it is to make it feel like you've accomplished something, because 3 years is a long time to not have any sort of accomplishment in the meantime. So have little milestones that you reward yourself for.
And for sure, I think a budget should be reflective of your life, right? Like, if you're someone who knows they want to go out to dinner on a Friday night, that can be a part of your budget. It doesn't need to be strict.
Yeah, it doesn't just have to be the boring bills that you don't like paying. It definitely should include those things that you enjoy, like going out for dinner on a Friday night. Definitely put that into your budget.
Yeah, for sure. Okay, so I have a budget. I'm reviewing it. I've got some money left over. What do I do with it?
Yeah. So if we talk about money left over and it's savings, the safest place for that is in a bank. And when we're putting it in a bank, the reason it's, there's some pros and cons when it comes to the banking system. I've been in it long enough to know that it's not perfect. But some really simple pros to a bank is that you can access your money in a variety of manners. So getting money out of an ATM, a branch, or it could be shopping online, it could be transferring to people. Those are different ways that you can access your money. I guess some of the downsides of banking is they're closing branches. So if you need to go to a branch, they may not be in your area anymore. You may have to remember PINs and passcodes that you didn't have to remember before. But realistically, if it's money in a bank is safer than money under a mattress.
Wait, hold up. I've got some clients who are very adamant that cash is king. Cash is king is a sentiment that I hear quite a bit.
So I guess I can understand the sentiment to some extent. To contextualize that, when it comes to cash under a mattress, there is a risk. I guess someone could break into your home, someone could be taking money out. You could be spending it more than what you would like because it's more readily available. It's harder to count as opposed to reading a whole number on a bank statement. So there's definitely some pros and cons to having cash, but being in banking for as long as I have and seeing the worst of the worst, I would say in the bank is a lot more protected than in in under the couch.
Yeah, because there's added level of security with the bank as well. There's those protections.
Correct. Yeah. So each bank has their own rules, but a lot of them have fraud protection. So if your card was stolen or it was scammed online and there's transactions that you didn't do, the banks will investigate, and there is instances where you can get your money back.
Yeah.
If that happened with someone breaking into your house and stealing cash, there's not that same level of protection. There's also different ways that you can have access to your money. So if you had a signatory on your account, so a friend or a family member doing shopping for you, and they decided to go spend all your money, it's tracked back to them because that card is attached to them. Whereas a cash, no one can really track cash. So
Okay, so how do you get a signatory?
So that's a really good... So most banks will allow you to do a signatory, and that is just giving someone access to transact on your account through online banking or through their own debit card, not using your online banking or your debit card. That's a big distinction.
Yeah.
A signatory will have their own login details and their own PIN numbers and own debit card to access your money.
Okay, fantastic. So I shouldn't be giving out someone my debit card with my PIN.
Correct. That because if you do that, all those fraud protections I talked about are usually null and void because you've given away your passcode or PIN code.
Well, that's good to know. So we've talked a lot about how important banks are. What are some of the ways that you would choose a bank?
Yeah, so it comes down to how you want to access your money. I hate cash. I hate going into a branch. So digital for me is really important. So I want a bank that has really good access to online banking, has a really good banking app, and doesn't charge me to making online purchases. The other way I would sort of choose a bank is looking at the fees for your account, and if you are a concession card holder, some of those fees can be removed because you've got a concession card. Other ways is like looking at interest rates if you overdraw your money or if you're saving money, and just again looking to see how you want to access your money. If you need a branch, don't choose a bank without branches or one that's not in your area.
Yeah, that's a really good point. I think something that's important to me really bothers me paying fees. That is something I definitely look for. Because people with not a lot of savings, would you compare lower fees to interest rates? Is that like a comparison you would make when choosing?
Very good point. When you've got lower amount of savings, interest rates are less important compared to fees.
Yeah. Because
fees will chew up your money more than what you would potentially earn. So if they're going to charge you a monthly fee of $10, like that's $120 a year, and in interest you may have earned maybe $3 or $4. So yeah, it's a massive difference in those fees that you would have had to pay versus the money you've earned.
So we've talked about how to make a budget. Can you give me a kind of a live example?
Definitely. I'm more than happy to go through a live example using the Money Smart website, a free website that the government runs to help people when it comes to money. So here it is.
Welcome to the Budgeting Planning Live demonstration. So just so you know, I'm on the Money Smart website. And when you're on the Money Smart website, just go down to the burger menu on the left-hand side, Banking and Budgeting, and then under the budgeting heading, there is a budgeting planner. Once you're here, it says it's going to take about 20 minutes. I'm going to go through that a bit quicker. You can use the Excel spreadsheet, but for simplicity's sake, I'm going to use the website version for now. Now, the first thing you'll see is the view. So if you'd like to know in line with your pay cycle, I would select, say, fortnightly if you're paid fortnightly. And let's go through now. So let's say your take-home pay is $1,400 a fortnight. So this is after tax. You don't have a partner and you don't work any overtime, but you'll also receive $200 a fortnight in Centrelink. There's other things you can put in here as well, but we're going to stick with that income for now. Next, we're going to go on to expenses. So let's say your rent is $200 a week. These are for if you own a property, which I'm going to skip past now. These are expenses that you may want to account for if you have them in mind. Let's say per month, your portion of the electricity bill is $100. Gas, we're not going to worry about for now. Internet, you pay $20 towards the bill every month. You may have Netflix, which let's say that's $15 a month. And your mobile is $29 a month as well. Now, talking about insurance, let's say you've got a car and it costs you $90 a month in insurance. You may not have contents insurance, health insurance, anything along those lines. Then we go down. Let's say we want to start working towards paying off debt, and we're going to put an extra $50 a fortnight towards that as well. Now onto groceries. I'm going to make this very simple and say that we spend $200 a week on groceries, just because I feel like that's easier than going through all those, but if you want to be very detailed, go ahead. Then we get a haircut. Let's say for me it costs me $40 a haircut a month, and I have some prescription medication which is $15 a month. I actually get glasses every year, so let's pop that in, $200 a year. I see a dentist, which let's say costs $200 or $250 every year. Hobbies, let's say one of your hobbies is going to your local club and playing sports, so that might be $10 a week. And let's say, yep, that's good for there. Okay, let's say we get a coffee 3 times a week, which let's say that's $15. And we don't smoke, we don't drink, but let's say we get takeaway once a week, and that one is $30. Okay, last one, here we go. So we spend $50 a week on when we fill up our tank, which is every fortnight. Rego is $800 a year. Let's say you spend $300 a month. Let's not account for any fines unless you have those to pay off, airfares and other. And we don't have any children. So if I scroll all the way up to the top and minimize everything, we are now going to see our budget. So I've chosen to view fortnightly because it's in line with our pay. So we have our money coming in. These are all the money coming out. You can see our biggest expense is home, which would be rent and bills. And let's see, we're actually in surplus. Surplus just means, extra money. So we have $388 a fortnight with this budget in mind. Now remember, we did also say that we were going to pay $50 a fortnight off of our debts. We might actually also put $50 a fortnight, or actually $100 a fortnight away as well, now that we know that our budget is in surplus. So this surplus is comfortable. You may want to put this towards something else. So this, let's say we want an emergency fund. So every fortnight we put $100 into the emergency fund as well. And we just play around with this budget until we're comfortable. Now, once we've got this, it says here, remind me to review my budget in 3 months. You can add that to your calendar. It also tells you to track spending. So you can print this off, or so you can rename the budget. You can also download the Excel version as well. But this is just a simple way to build a budget using the Money Smart website. I'd recommend playing with this to see how much you want to be spending on things. Compare it to what you're actually spending on things. And if there's a difference, try and work out, is that something that you can manage? Or if it's something that can be reduced over time. Thank you.
I've canvassed some of my participants to ask some questions. I've got some questions myself. We'll just run through those now.
Perfect.
Cool.
Far away.
So one of the questions, this is my question. So you've said that you've worked with people in financial hardships in the past. Can you kind of talk about kind of the context of how people, common ways people have found themselves and the situations people have found themselves in financial hardship?
Yeah, so one of my jobs when I was in banking was in the collections section of the banking sector. So that's for people who have fallen behind on their home loans and credit cards. When I was there, the common mistake people had when to get into hardship was avoiding the issue. So when you've got debts like that you're falling behind on, if you speak to the bank or the lender, there are sometimes ways that they can help you budget to get back on track, and avoiding the issue just makes it worse. So you could go into default, you could be charged a lot of fees, it could just make that paying that debt off or that hardship situation a lot harder.
Yeah.
Now, if the bank isn't that helpful, there's a lot of great resources out there. I mentioned before Money Smart website. They do have some sections on financial hardship and free resources from there. So you can also use that website to guide you through to places that can help you with financial hardship.
Yeah, so I guess that's a really good point of, say there's this issue, the longer you leave it, kind of like maybe like an infection. Like the longer you leave it, the worse it's going to be.
Correct, and the longer it's probably going to take to get out of that.
Yeah.
If you find yourself in financial hardship, budgeting can help because you're reassessing everything. Sometimes you can't budget your way out of an issue, and that's a big issue in itself. Another common one I've had seen people do is use another debt to fix the issue, and that can be a bit of a band-aid solution because that next debt costs them money, has extra fees, and it is a bit of a vicious cycle.
Yeah, I was going to say that kind of sounds like took the words right out.
Yeah,
vicious cycle.
Yeah, it's hard. It's hard.
What is a way? When would you say it's time that a budget is no longer good enough and I need to reach out and I need to seek help? Like, is there an indicating factor that I need assistance?
Everyone's different, I guess, because how they respond to stress. But for me, it's being kept up at night, not being able to sleep, or it might be agitated or anxious for no reason.
Yeah.
And that's when I need to sort of make sure or reach out to someone.
Yeah. So if you're scared to check your bank statements, that might be
definitely an indicating factor.
Yeah. Cool. I've definitely been there through uni.
Yeah. There's also other resources. So there's a website called Ask Izzy, which I can give the information at the end.
Yep.
And depending on your circumstances and what you're after, this could be, accommodation crisis. It could be no food, and there is a section on financial hardship and financial abuse, for example.
Yeah.
It will guide you to local resources in your area that can help you with each one of those issues.
I guess that's another important point, that there is help out there. Every service might not be applicable to you, but it's definitely, when you have these points of contact, maybe like Centrelink, sometimes there's grants and aid that you can, sometimes it's as simple as just asking.
Correct, yeah. And you're not alone, and there's usually people have gone through it before, so you don't have to reinvent the wheel. If you can ask someone who's helped others in your circumstance, it'll be probably a lot easier than doing it yourself.
And I guess that we could talk maybe about like a wider, I guess, as people in our society, we're told not really to talk about money. It's kind of a hard topic to bring up. But I think going back to, it's ask for help, reach out, don't hide it. Yeah, that's one of those important things, that reach out early.
When money troubles happen, there's a lot of shame and like a failure. If you could feel like a failure for not being able to manage your money, but sometimes life gets in the way, and I guess you shouldn't let that shame stop you from trying to get help, because the uncomfortableness you'd feel from getting help is probably less painful than the struggling that you were going through. Yeah,
for sure. In my experience, it's a very hidden kind of subject that people really hide, but I think it's far more common than people realise to be in financial difficulties, and it doesn't say anything negative about you as a person.
Correct, yes.
Cool. The next question is, how do I tell if a loan is good for me?
Yeah, so that could be its whole podcast in itself. But I guess to put it simply, is this loan going to help me achieve what I want to achieve? And is this loan the only way I can achieve that goal? For example, buying a home, saving $600,000 yourself to buy a home is probably going to take you 30 years. So, and then at that point, the house might be worth $1.2 million. So it's a vicious cycle. So that is one way to sort of think, is this the only way, and is it going to help me do what I want it to do? Without being so broad, there's a few key things you can look at. One of those is annual percentage rates, or it's interest rate PA per annum. That's a really good interest rate. A comparison rate on top of that will factor in any fees on that loan. Again, fees to see what that fee it's going to cost you to get the loan, to have the loan, so if there's monthly fees, and then if you pay out that loan, whether it's early or not, how much is it going to cost you?
I know myself, it can be a headache comparing kind of these figures. Could you give like a really simple example of kind of some of those interest rates, like a per annum interest rate on a loan of $1,000? What does that look like?
Yeah, so interest rates at that sort of cash point can be quite high because they're on a lower rate. For example, a credit card, you can have an interest rate from as low as 5.99% all the way up to 22% on that credit card. Personal loans, like that are short term, so this could be paid off in a few weeks or a few months, the interest rate on those is going to be closer to sort of 40 to 60%. So you're paying back almost half. The one big trap that I would see in those is making the interest rate based on the term. So you mentioned, like, the per annum rate is obviously an interest rate over the life of a year. If we have an interest rate over 2 or 3 weeks, that may not seem as bad over 2 to 3 weeks, but you have to multiply that to get up to a year, and then the interest rate can be quite exorbitant. Yeah,
so if it kind of compounds weekly, like a debt of $100 at 20%, that's in a week that's $120. Right? My math right? You can pull me up.
yeah, without getting too technical, essentially, yeah. So that's sort of more of a simple interest structure, but yes, it can be quite nasty.
So I guess it's not the first period that's the bad one, it's the second one when you
yeah, when you start paying interest on interest, that's where those numbers really quite correct, yeah.
Is there do credit cards work like that?
Yeah, so credit cards are their own beast. So without providing advice, it's more, you can have interest-free terms. So if you pay your credit card off by the statement due date, you may not even pay interest on that, but that's the entire balance. You may have specials where you can have an interest-free period for 12 months. But let's put those aside. Interest on a credit card is calculated daily and then you're paid on the statement cycle. So usually paid monthly. And then once it's charged, that then also accrues interest.
So it builds debt.
Correct, yes.
I guess the final question that I have gotten from my participants is, how do I avoid scams?
So to avoid scams, like we've mentioned before, is if it seems too good to be true, or if it doesn't seem quite right, there might be something that you need to question. So if you don't know if you don't have anyone in your circle of friends and family that you can ask about this, then the government website Scamwatch is the one I would recommend, where they have information, they have articles, and they can make you give you all the information to help you not get scammed again, if that's possible.
Are there kind of like some common hallmarks of scams that like are instant red flags that you can kind of look out for?
Yeah, so there can be investment scams. So Bitcoin is quite a big scam at the moment. So, advertisements to invest in Bitcoin could be quite a bit of a red flag. If you see something that costs $1,000, but brand new it's being sold for $500, you go, why is that so much cheaper than everywhere else? That in itself could be a red flag for a scam. It could be on a personal level, so it could be friends or a romantic interest. A lover, for example. If they start to ask for money, You know, that could be a potential red flag.
Yeah, that one kind of hits close to Mulberry, because I'm aware of some people who have been the victims of romance scams. I think something I ask people is, why would this person ask for a Coles gift card? Like, why are they very insistent on receiving gift cards?
Yes. So gift cards are quite common in the scamming industry. So it could be iTunes, Coles, any of the major retailers. Typically because they can't be tracked the same. If they're asking you to go to a 7-Eleven or doing an international money transfer, where you put in cash into, say, the transfer, it's really hard to track. So there's a few different red flags like that can make it a bit. You should be a bit more cautious of. Yeah,
so when the ATO calls you and asks for a Coles gift card, maybe that's a red flag.
Correct, yeah. With ATOs, banks, institutions, your telephone company, you can always say, can I have a reference number, and then call the number that's on the website of that company, and then try and get to that same person. Because if it's a bank, and I've worked in banks where I've had to call people, and I've had to call people who are in financial hardship and they do not want to talk to me, I give them a reference number, I tell them to call the number on the website, and then they can get back to me. So if it's a real person, they're not going to be annoyed that you're being cautious. If it's a scammer, they're probably going to want to keep you on the phone.
Yeah, good tip. So if you're not sure if you're talking to a bank, maybe you can just hang up, go to their website, call the bank.
Correct. Don't call the number they give you or the number you got in an email. Call the number that you
find yourself.
Correct, yeah.
Yeah, that's a really good tip. So that's the end of my questions that I have. Is there anything else you'd like to add?
Yeah, so I guess I want you to walk away with a few tools which I've mentioned, but I'll recap them here. So the first one is the two government websites that I mentioned. One's called Money Smart. That has really good, simple to read and understand articles. They're about 2 to 4 minutes long, and they cover things from everyday banking to your super, to debts, anything to do with money, and even retirement. So that's a really good website, and that's free to use and run by the government. The second one is the Scam Watch, which we talked about, to see and get help with potential scams, or even to investigate a scam that is in the works and hasn't happened yet. And then lastly, I mentioned, which could be for a mental health, housing crisis, or even financial hardship, is Ask Izzy. And that will just lead you to resources in your area, so you know who to talk to when it comes to needing help.
Fantastic. I guess that's the first step of knowing who to ask.
Correct. And this is it asks a very simple questions of what you need and where you are and who you are, I guess, in a way of if you're Aboriginal, Torres Strait Islander, if you're queer, if you're a disability, it will guide you to the specific services to help you.
Fantastic. Well, Conor, thank you for your time. I think finance is a really broad subject, but I think there's a lot of different points in here that could be helpful.
Yeah, perfect. And if anyone has any questions, they feel free to reach out to me via my website, or even via Google, which I'm sure we'll provide at the bottom of this video.
Yeah, for sure. Make sure it's all in there.
Perfect. Thank you, Hamish.
Thank you for your time.